Hello and welcome to Wisdom Bites. Hope you're well. Thank you once again for joining us. Very much appreciated. And in today's video, I'm going to be having a look at Bitcoin as per usual, but also I'll have a look at some of the altcoins as well as the Bitcoin miners. I'll also be looking at why a lot of people think that the markets are about to crash and where I see the picture on that. And if that sounds interesting, then without further ado, get yourself a cup of tea, sit yourself down, eyes on the screen, and let's get cracking. But before we start, the usual polite reminder, please remember everything in my video and all my previous videos is for educational purposes only. Nothing in this video should be taken as financial advice. I'm not your financial advisor. Please do your wider research before making any investment decisions. So with that out of the way, I'm going to start off with this chart here, which is the junk bond chart, the HYG. And the reason why I want to start with this is because a lot of people talking about the impending stock market crash. Quite a lot of YouTubers are mentioning this all the time, and they're basing their bearish predictions for Bitcoin solely based on what I'm just about to show you here. The reason why I want to show you the HYG, this is the junk bond chart. It's more romantically called the high yield growth chart, because when you're selling these, nobody's going to buy them if you call them the junk bonds, but that's exactly what they are. Just as an explanation for those people who don't know, there are two types of bonds. There's the investment grade bonds and these ones, which are the high yield bonds. The investment grade bonds tend to be the ones that are low risk, whereas the HYG, this chart I'm showing you here, this carries a higher risk because the people issuing these bonds here, the high yield bonds, have a greater chance of defaulting. So if you're buying higher risk bonds, you're always going to be much more alert to the changing market conditions so that you can get out before the market turns against you. So I'll start off with the high yield growth, the junk bond market chart here first. You'll notice from here that towards the middle of 2007, this is here, the market started coming down, while the Dow Jones index was virtually going flat and slightly down. So this was a clear sign from the junk bond market that we're coming towards a crash here. So the junk bond market normally leads the way before a crash in the Dow Jones index actually happens. And the first sign was this candle here in September 2008, when we had a big fall on the junk bond market here. But in the Dow Jones, it was only registered as a little blip down here. So while we bottomed out on this green candle, and that was in December 2008, the Dow Jones was still on its way further down here. So there was a delayed reaction. That's what I want you to take away from this, that the Dow Jones index has a delayed reaction to the bonds market, because these people holding the bonds are extremely sensitive to changing market conditions, and they act much quicker than the people in the stock market, simply because they're holding very high risk bonds and have a lot more to lose. The current chart for the bond market is basically this. We've been rising in this market since March last year, when we had this COVID collapse here. Since then, the bonds market has had a very strong rally, just like all the stock markets. And I showed you this chart many months ago when we were rising and said keep an eye on this market, simply because if we fell below this level here, which is around about the 83 mark, then that would start a slide down, which would then obviously trigger off the Dow Jones index. However, since we talked about this, the market's moved up a little bit more. So the first sign that we need to have a look at before the alarm bells start ringing is this candle here. And this is at 85.5. So keep an eye on this 85.5 level. And as you can see, we seem to be approaching a rounded reversal here. So it looks like the bond market is about to reverse. That doesn't mean it's imminent, that we're coming down straight away. Of course that can happen, but certainly it's now flattened out from these levels here, and we seem to be making our way slowly down here. But once this level at the 85 is broken, that's when the Dow Jones index will be triggered off. At the moment, there's nothing to worry about for at least a few months. But certainly this candle can come down at any time. This is the October candle. If this makes a rapid decline below these levels of $85, then we have to be on our toes. And this is the Dow Jones Index, a chart that goes back well before 1921 here. And as you can see with this chart, we're now right at the top of that. So it does look from this chart that a crash is on its way. But when we have a close look at where we are currently here, at the top of the trend line, we've been here now approximately 7-8 months. So whilst the Dow Jones can fall very, very quickly, and it seems imminent from looking at these charts, but when we look historically, we can see quite clearly that the market can spend several months at one level. Here, if you look, there's many, many months before the actual fall that occurs. Quite a few YouTubers I've noticed have been calling for a crash coming, and they're basically aligning that with the Bitcoin and saying that the Bitcoin is about to crash. Whilst that is possible, and you can easily panic yourself into selling short at these levels, my own personal opinion is that with the Bitcoin cycle not having come to an end yet, we still have another maybe 1, 2 or 3 months to go before we come to the top of that cycle. So only time will tell how it pans out, but certainly I needed to put this into perspective because a lot of YouTubers were talking very bearish about the impending doom and gloom with the Bitcoin as well as the stock markets. When you're dealing with stock markets, you really need to take the emotion out of the equation. And it really helps if you have emotional intelligence when you're dealing with the stock markets. Emotion is a money killer in these markets. If you inject emotion into these markets, you're going to be left out of pocket. So please always zoom out, have a look at the perspective of exactly what's happening without injecting your perspective with emotion. And having a look at the RSI, we can see here that whenever we come to a blow off top, this was the first cycle in December 2013 when we had the blow off top here. And you can see that we had 2 peaks with the RSI in this cycle. And we've said that the current cycle is very similar to the first cycle. So we've had 1 peak already here, and we've just now peeped our head above the 70 level. So it looks like there may be a few months to go, maybe 1, maybe 2, maybe 3. Who knows? We don't know. But we're just piercing above the 70 level over here with this current candle in October. And it may well be that in the next 2 or 3 months we come up here, make a peak and then fall down with our blow off top. Only time will tell. We can only speculate in terms of what the charts are showing us and taking a perspective on it. And the fact that the junk bond market seems intact may be a clue that we may have a few more months to go here before anything tops off. Only time will tell, but certainly that's the way I'm seeing things at the moment. And if we have a look at the weekly chart, we're getting a similar confluence here with the RSI just peeping its head above the 70 mark here, having made this peak at the $64,000 mark here. The important thing to notice here in the RSI is that since we made this top in April at the $64,000 mark, the RSI has been in a divergence here. If we have a close look, so having made the peak here corresponding to this level, price action went higher towards the $64,000 mark, whereas the RSI, that I've shown you in the past many times, was making a bearish divergence here. And as a result of that, we were making lower highs along this downward trajectory as the price for Bitcoin started falling. But recently, we've just made our first higher high here and our first higher low there. So the trend obviously has now reversed over here, and the market looks good to go to higher levels in the RSI as well as in the price action. And as we know, whenever there's a blow off top, we tend to make a new peak. And here, we've not had our peak yet. So there's obviously room to grow here before we have our blow off top. And some people think that we already reached our high here. Well, we made a higher high here now, having gone up to $67,000. So a new high always means, a new high is a sign that we're going to go much higher here. How high we go, I'm going to have a look at a little bit later. But certainly when we zoom out of the charts, we can have a look that we get a much bigger perspective of what is actually the bird's eye view of what's happening with Bitcoin currently. I'm now going to have a look at the log growth curves, which is something I've been showing you for the last many videos now. So what we're going to do is going to compare the current cycle in 2021 with the first cycle at the end of 2013 here. And if we have a look at some of the candles here, you'll see that there's a strong parallel going on between the first cycle with the current cycle. And it may be giving us a clue as to what may happen in the next month or so. So give you a description. The top green line here is the 76.39 Fibonacci retracement level. The orange line is the 50% and the lower green line is the 23.6% level. So in the first cycle here, we made our first peak in April 2013. And currently in this cycle, we made our peak in April 2021, which corresponds to that. We made our low here in July 2013, and similarly we made our low here in July 2021. So the April top reached the 76.39 level here, which is exactly what happened in the first cycle, and the bottom reached our 28.6% level, which is what happened in the first cycle here. So following the low of April, we spent the next 2 months here below the orange line, which is exactly what we did in the first cycle here. That was August and September. And then October here is the first time we breached the orange line, which is exactly what we're doing currently now. We're just going above the orange line here. So month by month, it seems to be following the same pattern as the first cycle. And the $64 million question is, the November candle that we got in the first cycle, which led to the blow off top, is that what's going to happen here? Will the next candle give us the blow off top here in November? Well, everyone can make up their own mind. I'm only here to point it out that the first cycle seems to be going very similar in correlation to the current cycle here in 2021. And it looks like we're going to close above the orange line at the end of this month. So the question is, are we going to have a massive blow off top in November coming up, just like the first cycle here? So only time will tell. I'll be very happy to hear what you've got to say in the comment section below. So leave your comments there and tell me what you think. Is this more likely or less likely to happen in the next month? We must always remember that chart patterns and fractals give us an opportunity to form a definite advanced opinion in what the next move should be or could be, just from the character and the style of the pattern itself. And that's before it obviously reaches its completion. So it would be very interesting to know what could happen here. And will it be followed by a bear market like it was in 2014? Certainly interesting times ahead. I'm now going to have a look at the 21 weekly exponential moving average, which is the yellow line here. And we mentioned in the last video about the 3 white soldiers over here, which is a very bullish chart pattern. Now, you may have noticed here that we have a very bearish looking current weekly candle. And the reason why this is a bit worrying, and we have to always point out whatever we see in the charts, we can't always just be bullish for the sake of it. This normally looks like a reversal candle and it is concerning, but we've still got 12 hours to go before the end of this weekly candle, which will be 1 o'clock UK time. But the closer it ends around these levels here, anywhere around the $61,000 mark, with a long wick and a very small body of the candle, that can have a very powerful effect of what could follow afterwards. So we're hoping that's not going to happen. The reason why I say that is because this is what they term as a gravestone doji candle. And this is usually found at the top of rallies before a reversal takes place. And if we look through history, we found that back in June 2019. With this candle here. And that spelled the beginning of the downward trend. But notice it was a very small body of the candle here compared to what we've got currently. But certainly this long wick tells you that there's a rejection of higher prices being played out in the market. But only time will tell. We need to keep our eyes on this, but certainly this is a bearish concern that I've got here. But certainly the daily moving averages with the white line here, the 50 daily moving average, and the 200 daily moving average. These are looking very healthy at the moment. The price is rising and the price action is well above the 200 and the 50 daily moving average. The TD sequential had reached a 9 green over here, and that's usually a sign that we're getting a bit overheated or overbought, and we were due for a little correction over here. Maybe the price will come back to the 50 daily moving average like it normally does in a correction. So if we have a look at the daily pivots, they're showing us a very interesting story. So on the 1st of October, we moved above the pivot line here and found support on the R1 line. But we barged through the R2 line here as well and found resistance at the R3 line here. So now we're currently moving down towards finding support on the R2 line, which is exactly at around about the $58,000 mark. We have come down to as low as 59,000. So the question is whether we'll find support here. And if we should break that, then the next support line is going to be on the R1 line, which is at the $51,000, $52,000 mark here. And if we have a look at the Fibonacci retracement levels, we can find that the current support we're getting is at the 23.6 mark. This is usually not a very strong level of support. The higher level of support is really at the 38.2 level. So it would be quite logical for the price to come back down and find support at these levels at around about the $56,000, $57,000 mark before we start moving to the higher side. But we are coming to the end of the month, and I expect by the end of this month to be in still the $60,000 mark level. So anything can happen in the next few days, but certainly I'm not expecting, albeit possible, that it can come down to these 61.8 level where Bitcoin usually finds support. But because we're on this very strong bull run at the moment, that would suggest to me that we're going to get turned back, reversed from either the current level or the 38.2 level at the $56,000, $57,000 mark. Moving on to our exit indicators now. First one I want to show you is the pi cycle. We're currently here. We're waiting for this red line to cross the green line. It does look far apart at the moment, so there's a lot of room to grow for the price before the red line can come and meet the green line somewhere over there. Blow off tops tend to be when these two lines cross over, just like here, which was at the $64,000 mark. And back in history, and this happened in the first cycle as well. So we've shown you that many times before. We don't really need to go back into it again. Certainly the red line is making a trajectory towards the top side. And if the price has a parabolic rise, then this will have a very sharp move to the upside as well here to cross this green line. It may look very far apart here, but a parabolic rise will certainly make this sharply go up towards the green line here. Moving on to our next exit indicator, which is the 1458 daily moving average here. We have our previous all-time high at 19,800, call it 20,000. And when we draw a horizontal line there, it's when this 1458 will come and cross the line here. Whatever the price is at that time will be the cycle top once we have this cross here. And that's based in historical terms to what's happened in the past. This was our cycle top back in November, December 2013. And as you can see, when the horizontal line crossed from that all-time high was the exact peak of the next bull cycle. So that's what we're expecting, that once this line crosses here, this all-time high horizontal line, that's where we will more than likely peak. Okay, looking at the Bitcoin investor tool as our exit indicator, currently we can see that we're on the white line here, and the peak needs to be above this red line here from our historical context that we've got. So this is back in 2018, and if we go further back, this was our cycle peak at the end of 2013. So as we can see, we came up to the white line here, we found resistance, and we're having a little correction here currently before we make a move towards the upside for the blow off top above these levels here. And the question is, how far up can we go above the $120,000 mark? Historically, if we have a look, in the previous cycle in 2017, once we broke above the red line here, the price moved up by approximately 130% above the red line. And the previous cycle to that, in 2013, once we broke the red line here, the price went up above 380% here. So as we can see, the percentages have been falling. If we went above this red line by even 50%, that would take our price to around about the $170,000 mark. However, the log growth curve seems to be presenting a much more accurate picture of where the blow-off top could be. So if we were to actually top off next month, as suggested by the first cycle, as we had a look earlier on, that would take us above to this level here, around these levels. This is the current October month candle. Then the November's candle would take us to the $136,000, $137,000 mark. But as we've seen in the previous cycles, the price tends to protrude above the white line slightly. And there as well. So according to the log growth curves, if we were to top out anywhere around here, it may take us up to about 140, 145 before retreating to the downside. But certainly, according to this, it may not be that we reach the $300,000 mark or even the $200,000 mark. But it may well be we have a correction at these levels and the start of a new bear market before going on to a next cycle. And as I've always said, that we've always got to be fluid and flexible as to where we can go. We have to be guided by the charts, not by our emotions and what we expect or could have or should have, etc. But only time will tell, but certainly the next month is going to be critical. Will we have a blow-off top towards the top as suggested by the first cycle? Or are we going to make a gentle move here to higher levels? Okay, a quick look at the Ethereum, and we've been looking at this long-term trend line here, which the Ethereum seems to be respecting right up to now. We found support here, resistance here, and now support all the way along this line here before we move to higher levels. So currently we're finding resistance at the May top that we had at around about 4,300 level. Once we can get above the 4,300 level here, break of that neckline will mean that we will be on our way to much, much higher levels. So keep an eye on this. Once we close above the neckline here, we'll be good to go to much higher levels. And our target for the end of this bull market was 21,000. But if Bitcoin's going to top out around about the $140,000 mark, then it looks to me as though that will be reflected with the Ethereum as well, which will be at lower levels. Only time will tell, but we can only judge by what's going on in the charts currently. And if we have a look at the daily moving averages, the 50 daily moving average and the 200 daily moving average, the fact that they're both pointing to the upward direction shows that the price action is very healthy, with more upside to come. A quick look at the Bitcoin miners, starting off with Marathon Digital Holdings. And we're coming up to this neckline here. We've created this cup and handle pattern, and we're coming to retest this neckline now. And once we break this with a weekly candle above the neckline here, we should be good to go further up. And it follows that if Bitcoin was to top off much less than the $300,000 target that we've had, then that will be reflected in the price of Marathon and what have you. And the original target that I had for Marathon was, as you know, $600 from its current price here of $649. If Bitcoin gets to 140,000, as the log growth curves are predicting, we'll need to have a look at where the Bitcoin miners are in terms of we'll have to have a look at where the Bitcoin miners prices are at that time. Certainly, we don't know if it's going to be topping off exactly at the same time. Certainly in the last cycle, Marathon topped out in November 2017, which was a month before the Bitcoin price. But certainly these companies have changed a lot since then and reflect more in line with what's happening with Bitcoin than previously, because Marathon itself was a patent company and since 2017 has taken on a lot more Bitcoin mining machines and what have you. So they're more now in line with what's happening with Bitcoin. So I would expect Marathon Digital Holdings to be topping out approximately the same time as Bitcoin. But certainly on the daily chart, as we can see with the 50 daily moving average and the 200 daily moving average, the green line here, they're both moving in the upward direction. So this price action looks very healthy for us to move much further up. A quick look at Riot blockchain And this chart's not looking very healthy currently at the moment. I think a big problem occurred with the Riot in the sense that back in September, they underwent a capital raising exercise. The price has just basically plummeted back towards this triangle here. It's trying to make a recovery in the last few days, but certainly once the market for Bitcoin starts moving up, it should start to move higher. But certainly the price has been depressed by the capital raising exercise that they had in September. I'm expecting Riot to come back up to this neckline here. And then once we break this, then we should be good to go. But until then, it looks to me as though it's quite undervalued when I looked at some of the other parameters, which I won't go into now. But certainly they're one of the top 2 companies in this mining field, along with Marathon. And once this overhang with the capital raise gets out of the way, I would be expecting it to come up to this neckline here very shortly before breaking to the upside. A few people also requested me to cover the HUT8 mining company. And as we can see quite clearly here, the 50 moving average and the 200 daily moving average, both pointing to the upside here. So this chart's looking very, very healthy in the last few months. We're making higher highs all the time and higher lows all the time. So this chart seems to be only going in one direction, and that's to the high side. Currently, we broke this neckline here and now coming back to test it as support. So it looks like it's on the launch pad to go to much higher levels. And certainly the 50 and the 200 daily moving averages are suggesting that we've got a lot more growth to come here. A quick look at Cardano, which has been requested many times by many people. So obviously back in October, when we broke out here on this neckline, when we had this cup and handle pattern, it broke out around the end of November here, and then went sideways for a while before we had a clean break around the January time. It's shown the most strength amongst the other altcoins by moving very rapidly to these levels. And we're just making another higher high from these points here. And we're continuously making the higher lows as well. So this chart seems to have a very good upward trajectory towards much, much higher levels. And while Bitcoin and the other altcoins were having a correction from high levels in the April-May time, Cardano recovered much, much more quicker and made a higher high back in September. So while we're having a correction at the moment here, it may well be that we're gearing up towards a bigger move very shortly. And it could be that we're forming a cup and handle here as well. So when we come up to this neckline here, that's when we're going to have a bigger move. But it's making its way slowly but surely towards these levels here at around about the $3 mark. The current weakness in the Cardano chart is being reflected by the 50 daily moving average, which has taken a turn towards the downside. But certainly if Bitcoin starts moving to higher levels, this will go and reverse towards the upside. That's what I would be expecting. But certainly there's been a bit of weakness in the last couple of months here. But the longer term potential is very, very good with Cardano. So coming back to Bitcoin, it seems to me that having had a look at the Dow Jones and the junk bond market, we can conclude that there may still be a few months to go before we top out with Bitcoin and maybe the other markets as well. But certainly the junk bond market would be the first sign before the Dow Jones market starts to decline, and we're not really seeing much sign of that. And while we're having a rounded reversal taking place, it could still be quite a few months before we start the decline downwards. So that obviously gives us a few more months to play with Bitcoin, and hopefully the price should go much higher in the next month or so. And we've also seen with the log growth curve that the top price may well be around the $140,000, $145,000 mark. But certainly we'll use some of those exit indicators that I've shown you as a benchmark as to where we are, as confirmation that we've topped out with Bitcoin in the next couple of months. Okay, so we'll leave it there. Thank you very much indeed for watching. If you found value in this video, then please do remember to like and subscribe if you haven't already done so. And if you've got any comments, questions or suggestions, then leave them in the comments below. Until the next time, take care, stay safe, and I'll see you in the next video. Bye for now.